At an individual level, one of the biggest debt decisions that you'll have to face throughout your lifetime is mortgages. Whether to take a mortgage, whether mortgages make sense in the first place, and how to go about a mortgage decision. So in this video, I'm going to be taking through the ins and outs of mortgages in Kenya, whether mortgages make sense in Kenya, because we've all been taught that maybe in the Western world that mortgages are good long-term debt. So that's the situation in Kenya. So do stick with me as we talk about mortgages in Kenya throughout the video. So if you like educational videos on personal finance and investing and videos that can help you make informed financial decisions, then do consider subscribing to my channel, as I'll be releasing more videos talking about how you can go about major financial decisions in your life and educating you on how to manage your personal finances and go about your investments. So let's get right into today's video. I would like us to start our discussion on mortgages today on a very interesting space. So if you look at where the word mortgage comes from, you're going to see that the word mortgage comes from two old French words meaning debt pledge. So there are people who try to argue that maybe a mortgage is signing a contract that is going to take you to your deathbed, because you're going to be paying a mortgage, because most people take up mortgages maybe when they are in their late 20s or early 30s, and then they take maybe a 30-year mortgage or 20-year mortgage. So you're going to be paying that mortgage for the rest of your working life, or maybe until your retirement years. So that's why maybe people will try to say that maybe a mortgage is a debt pledge. So I would like to continue my discussion about mortgages by looking at the Western world, because that's where maybe most of us have been taught to think about mortgages. So if you look at the Western world, more so in the United States, you're going to see that most people try to prefer maybe to term mortgages as a good long-term debt. So why do they term a mortgage as a good long-term debt? So it's because if you look at the average mortgage rate in the US, it's around 6%. The mortgage rates can be affected by many factors, one of them being interest rates, maybe the Fed rate. The Fed is basically the Federal Reserve Bank, which is a central bank in the United States. The same way we have the central bank in Kenya. So we usually have the interest rates that dictate the rate at which commercial banks lend money to individuals and to businesses. So the Fed rate, for example, can dictate the rates of mortgages, but on average, we have mortgages in the United States at 6%. So once we have the mortgages at 6%, you're going to find that the benchmark asset in the Western world, maybe in the US market, is what you call the S&P 500. So if you look at the average return of the S&P 500, you're going to find that maybe the S&P 500 has returned an average return of 10.27% from 1957 to 2023. So if you come back to our Kenyan markets, maybe to our local markets, I'd like us to start by looking at the central bank rate, or maybe the lending rate of the central bank to commercial banks. The lending rate during low interest rate environments is usually at around 9.5%. And then we have our mortgages, the average mortgage being at around 12-13% on a low interest rate environment. And then you have our benchmark asset. So for a Kenyan economy, I don't want to say that maybe we can use the Nairobi All Share Index as our benchmark asset, because the NSE hasn't been performing quite well in the recent years, though this year it has performed quite well. So I'd like us to use long-term T-bonds as a benchmark asset. So this can be debated whether it's a good choice for benchmark asset or not, but let's just use it because it's maybe one of the highest returning assets in our Kenyan economy in the first place. So maybe it can be argued to be a good choice. So if you look at long-term T-bonds in a low interest rate environment, they fetch around 12 to 14% per annum. So if you go back to the US market, we saw that maybe the benchmark asset, which is the S&P 500, has fetched an average of 10.27%, which is a USD return. So it's always good to know that maybe a USD return is very different from a Kenyan shilling return. So maybe that's something that maybe you can tackle later, but just know that in the back of your mind that a USD return is very different from a Kenyan shilling return because of what you call adjusting for currency differences. So you have seen the S&P 500 returning 10.27%. Then you have seen the mortgage rates at an average of 6%. So if you have one investor, maybe we have you here who is debating between buying a house cash 100% and whether to invest their money in the benchmark asset and then maybe take this mortgage, you can see that you can easily decide to maybe invest your cash and then take a mortgage, because your money that you have invested in the benchmark asset will be giving a return of 10.7% per annum, while your mortgage will only be repaying a rate of only 6% per annum. So you are earning 10.27% per annum and only giving back 6% per annum. So you have made 4% or 5% per annum based on those two differences. But when you come to a Kenyan market, we have the average mortgage rate at maybe 12-13% during low interest rate low interest rate environment, and then you have our long-term T-bonds fetching between 13 to 14% per annum during low interest rate environments. So if you look at the difference, you can see that they say the rates are almost the same, and depending with your financier, maybe your lender who is lending you the money for the mortgage, or maybe where you are the financial institution that is giving you this mortgage. Some financial institutions have actually higher rates for mortgages. You can find a mortgage at 16-15%. So if you have the same investor here coming in our Kenyan markets, deciding whether to buy a house cash 100%, whether to go the mortgage route, you'll find that maybe they can hardly have an edge if they invested their cash 100% rather than and then go for the mortgage. So those are some of the reasons why maybe in Kenya now we can't argue that maybe a mortgage is a good long-term debt, because the borrowing rates in Kenya are quite high. Maybe the rates for mortgages are quite high, and maybe our benchmark asset isn't returning higher than the average mortgage rate here in Kenya. That's number one. Then number two, we have the rate at which the government is borrowing money. So we have always have this case whereby the government is competing with businesses and individuals to who gets much money from the commercial banks. Because we have seen the government offering 16% this year, 17%, 18% as a return to government bonds. And the biggest investors in government bonds are actually commercial banks. So commercial banks find themselves lending much of their money to the government, because the government has much lower risk compared to individuals and businesses, because they have not defaulted on their domestic debts since the existence of our country. So you find them preferring to lend money to the government rather than lending to businesses and to individuals. That's maybe one of the reasons why our mortgage rates have been quite high. So that drives my point from that maybe in Kenya we really can't say that mortgages are good long-term debt because of number one, the high interest rates on mortgages, and then number two, our benchmark asset isn't returning more than what the mortgage rate is requiring us to pay back. So with those two factors, then you can conclude that maybe we have to be very careful with mortgages in Kenya, because they don't necessarily qualify to be termed as good long-term debt. Even though yes, houses appreciate over time, and maybe you can still sell your house at a greater value in years to come. But remember, mortgage is at 2010 is a maybe 10 to 30 years decision that can take years before you clear your mortgage and maybe before you actually get to sell your house. We clearly can't term mortgages in Kenya as good long-term debt. So you have to be very careful with mortgages in Kenya, and here's why. So number one is what we call, as we have seen, mortgages have a very high interest rate or maybe high repayment rates. So you have to be very careful with mortgages, because if you're not careful with a mortgage is not a 1 year decision. It's not a 1 year commitment. It's a commitment that maybe can take you 10 to 30 years, because you have seen banks offering mortgages at 20, 25 or even 30 years. So you have to be very careful, because once you make a bad financial decision with a mortgage, it can take you 20, 25 years to recover. So that will maybe set you back a lot of years, or maybe it will have you working hard for some other people, maybe the bank, because they're the main beneficiary here. Then number two, so number one is that the high rates are not good, and then number two, a mortgage is a long-term commitment, so you have to be very careful with it. So when does maybe taking mortgages in Kenya make sense? So there are a couple of scenarios that maybe where you can consider mortgages. So number one, or maybe the simplest one, is whereby you have some employers who enter into some contracts, maybe some partnerships with financial institutions, whereby they offer the employees very good mortgage terms or even car loan terms. So you may find an employer giving a mortgage at 3%, 5%, 8%. So these are very unique terms that can be considered to be very good rates for mortgages. So mortgages at those rates can be considered to be good long-term debt because of maybe the lower rates, and you can easily find an asset class that can give you a return that is higher than 3%, 5%, 8%. So the rate being lower makes the burden of the mortgage lighter, and you can easily offset that with maybe an asset class you can easily find an asset class that maybe returns higher than 3%, 5%, 8% in the Kenyan market, even not having to expose yourself to maybe high level of risk. So that's number one. So those special mortgages for special classes of employees, or maybe offered by a special class of employers, so those are no-brainers. You can easily take them. Then number two, we have some arrangements by Kenya Mortgage Refinancing Company. So maybe there are some guys who will have argued that maybe the average mortgage rate in Kenya is lower for some banks, which is the case because the Kenya Mortgage Refinancing Company, which I think is a partnership by the World Bank and the African Development Bank. Okay, I'm not sure about this, but maybe I refer to this at the snippet of this video that tries to equip Kenyan households with affordable housing options. So yes, they have this partnership with some banks and some circles whereby they offer single-digit interest mortgages at around 9.5%. But then these mortgages are not available to everyone because number one, I think they are only available to first-time homeowners. Then number two, you can only get a mortgage up to the tune of 10 million, I believe. Then yes, the interest rate is good at 9.5%, but still there's some people who can argue that maybe 9.5% is still high for a mortgage, depending with maybe the interest rate environment we're in, the inflation rate, and maybe the returns of the average benchmark asset. So, but I believe they are a better option, maybe they're a better arrangement for a mortgage compared to maybe what commercial banks offer under the same scenario. So that's the other thing. Then some other times some banks do offer some preferential rates to some of their clients, maybe to some of their customers, if the relationship between the customer and the bank has been good. Some banks allow for some of their clients, maybe some of their customers, to negotiate for preferential rates for some services, maybe some of their products like mortgages. So you can always negotiate for lower rates for mortgages. Then number four, whenever you're considering a mortgage, maybe some mortgages are offered at a fixed rate, whereby maybe the rate on your mortgage doesn't change with changes in the interest rate, maybe the central bank lending rate, because we all know that lending facilities by banks or maybe by commercial banks are always adjusted. The base lending rate is always adjusted to match with the central bank lending rate. So if the central bank lending rate, like maybe you have seen this year being lowered from 12.75% 12%, so you have seen banks or commercial banks lowering their base lending rate. So you can have a fixed rate mortgage, or maybe you can have a varying rate mortgage. So that impacts your mortgage differently. So it's always advisable to go for the fixed rate mortgage, because that means that maybe the rate of repayment of your mortgage won't change over time. But now a varying rate mortgage can have both advantages and disadvantages, because if the interest rates are rising, that means your mortgage will become more expensive. But if interest rates are coming down, that means your mortgage will become at least more cheaper in terms of interest rate repayments. So you should always consider that. Then another thing that makes maybe mortgage more expensive is that for mortgages, maybe some lenders don't offer mortgage insurance. So you have maybe to look for maybe term insurance to carry to their mortgage, so that in case you died, then the bank does not come for your house, and that leaves your family in danger. So it's always good to have maybe mortgage insurance in case your lender doesn't give you that as a package together with your mortgage. Then as well, you may find some people taking up some job loss or maybe retrenchment covers, because most of them are using their pay slips, their pay slips to service these mortgages. And in case they lost their incomes or maybe they lost their jobs, that means their mortgage payments will be endangered, and they may fail to pay their mortgage installments for maybe a month or two, and that will mean a default, and they don't want that. So you find people taking up the job loss or maybe retrenchment covers, and also maybe some mortgage insurance covers, which maybe can be classified under term life insurance. So those are some of the things, some of the dynamics of taking mortgages in Kenya, like I mentioned. So if you're looking for a mortgage, maybe the first place to start is maybe Kenya Mortgage Refinancing Company, those arrangements that they have with banks and circles. Then number two, circles also maybe have better mortgage terms than banks, so you can also maybe consider your circle for a mortgage. Then number three, you can also try to maybe discuss or maybe negotiate for preferential rates with your bank if you have been a good customer, a good client with them. But by and large, you should be very careful with mortgages because of the reasons that I've said. Rates are high. Then number two, mortgage is a long-term commitment, so you don't want to be paying the cost of a bad financial decision for 10-20 years. So you have to be very careful with mortgages. So that's it on mortgages in Kenya, but maybe just the final words, maybe try to summarize what I was trying to say. So number one, mortgages in the Western world being good long-term debt doesn't translate to mortgages in Kenya being good long-term debt because of what you have looked at. So the borrowing costs in Kenya are quite high, and the benchmark assets don't return higher returns than the mortgage rates in Kenya. So that's number one. Then number two, like I've mentioned, you always have to look at the options offered by different lenders. So start with maybe the banks and circles that have the arrangement with KMRC. Try to see if you can qualify for the 9.5 or the single digit rate mortgages. Then if your employer has those special scenarios, maybe special arrangements that will get a low interest rate mortgage, and that's a no-brainer that you should be trying to take advantage of. Then just to finish it off, if you're still thinking about taking a mortgage, so number one, be very be very keen, or maybe be okay that you are okay with paying those monthly installments or maybe monthly repayments, and that your budget allows the payment of that and it does not overstretch your budget. Because most if it's a varying rate mortgage, in some cases when the interest rates are high, you may overstretch and you may be unable to maybe meet the monthly repayments from your payslip. So that's my take on mortgages in Kenya. So be very careful with mortgages. Always look at mortgages in Kenya from all those perspectives, never debating about mortgages and thinking whether a mortgage is a good decision or not. So let me know about what you think about mortgages. If maybe there's some that maybe you have questioned from what I've stated, maybe some that maybe you'd like me to explain further, let me know in the comments. So that's it on mortgages in Kenya. I hope this video has been educative and maybe it has helped you think much better, maybe have a different perspective about mortgages in Kenya and mortgages in general. So if you like educational videos, if you like financial videos or videos that can help you make better financial decisions, whether it's personal finance management, whether it's investing in Kenyan markets and global markets, then you can subscribe to my channel. So I'll be releasing more videos, more educational videos that can help you make better financial decisions and help you grow financially. So that's it for this video. See you in the next one.